Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to have you here as we dive into the latest action in the markets on this eventful day, March 25th, 2026. We've got a lot to unpack, from geopolitical tensions to tech sector shakeups and some standout performers in the large cap space. So, let's get right into it with a focus on what matters most for us long-term investors, while also touching on short-term trends that could shape our strategies. First up, let's check the pulse of the broader market. It's been a positive day across the major indexes, with the Dow Jones climbing a solid 0.66%, the Nasdaq jumping 0.77%, and the S&P 500 up by 0.54%. Even the Russell 2000, representing small caps, posted a strong 1.23% gain. What's driving this optimism? Well, a big part of it seems to be cautious hope around a potential resolution to the ongoing U.S.-Iran conflict, which has been a heavy cloud over the markets. Lower oil prices on the back of peace talk rumors are giving equities a bit of breathing room today. But as long-term investors, we know this kind of geopolitical noise can flip quickly, so let's keep our eyes on fundamentals over headlines. Speaking of that U.S.-Iran situation, it's the big story dominating market sentiment right now. Reports suggest the U.S. has proposed a 15-point peace plan, and there's talk of back-channel diplomacy. Markets are rallying on the hope of de-escalation, with some analysts even suggesting a resolution could unlock opportunities for U.S. energy providers. However, skepticism remains high. Several sources warn that negotiations are fraught with challenges, and a quick deal seems unlikely. For us long-term folks, this volatility is a reminder to stay diversified and not get too swayed by short-term geopolitical swings. Still, in the medium term, keep an eye on energy stocks if tensions ease, as they could see a pullback from recent highs. Now let's zoom into some of the day's biggest movers among large caps. On the winning side, we've got some impressive gains in the tech space. Advanced Micro Devices and Intel are leading the charge, both up over 7% today, signaling strength in semiconductors despite broader sector headwinds. ARM Holdings also caught everyone's attention with a massive 16% surge after announcing plans to sell its own AI-focused chips, a game-changer for their business model. This kind of innovation is exactly what we look for in long-term growth plays, though short-term volatility in tech remains a risk to watch. On the flip side, not everyone's celebrating. Among the large-cap losers, Micron Technology took a hit, down over 3%, possibly reflecting some profit-taking after a stellar yearly run. Cheniere Energy also slipped more than 3%, likely tied to the dip in oil prices as Iran conflict fears ease. These pullbacks can be opportunities for us long-term investors to scoop up quality names at a discount, but let's be mindful of the broader energy sector trends in the coming weeks. Looking at the most active stocks by volume, Nvidia continues to dominate the conversation with a modest 2% gain, showing that investor interest in AI and tech leaders hasn't waned. Intel also made the list with high trading activity, reinforcing the semiconductor buzz we're seeing today. Supermicro Computer popped over 8%, catching a lot of eyes despite some recent struggles. High volume often signals short-term momentum, but for our long-term strategy, it's a cue to dig deeper into whether these moves are backed by sustainable growth. When it comes to the heavy hitters moving the market, the usual suspects are in play. Amazon climbed over 2%, likely buoyed by analyst optimism around its cloud business and AI potential. Tesla edged up slightly, while Microsoft saw a small dip. These names often set the tone for the market, and for us long-term investors, they're core holdings to weather any storm. Short-term fluctuations? Just noise. Focus on their innovation pipelines and market dominance. Shifting gears to earnings, it's a busy week ahead with some notable names reporting. We've got companies like Lululemon, FedEx, and Chewy on the docket. Chewy, in particular, already reported strong quarterly results, with their CEO highlighting resilience in the pet industry and expanding profitability into 2026, a positive sign for consumer discretionary strength. These reports give us critical insights into consumer behavior and sector health, which are key for long-term portfolio decisions. Medium-term, though, watch for any surprises that could spark volatility. You can find exclusive earnings transcript summaries on MarketSnap to dive deeper into these results and what they mean for your investments. Let's take a quick look at the top large-cap performers over the past week. Garmin led with a stunning 21% gain, while AppLovin and Shopify both posted double-digit increases. These short-term sprints are exciting, but for us, it's about whether these companies can sustain growth over years. A name like Shopify, with its e-commerce dominance, could be a long-term winner if it keeps innovating. On the other hand, some large caps struggled this week. Genuine Parts dropped over 20%, and Rivian slid 14%, reflecting challenges in their respective sectors. These dips might tempt bargain hunters, but as long-term investors, we need to assess if these are temporary setbacks or signs of deeper issues. Short-term, they could face more pressure if market sentiment stays risk-off. Rounding out our sector snapshot, industrials topped the charts with a 2.12% gain over the past week, followed by consumer cyclicals at 1.62%. Energy also showed strength with a notable weekly jump, likely tied to earlier oil price spikes before today's dip. These sector moves can hint at broader economic trends, and for long-term strategies, industrials and energy could be areas to build exposure if you believe in infrastructure and energy demand growth over the next decade. On the weaker side, healthcare lagged with a 0.62% decline this week, and financial services also dipped slightly. These sectors might be feeling the pinch from macro uncertainties like inflation fears and geopolitical risks. For us, this could be a chance to pick up undervalued names with strong fundamentals, especially in healthcare, which often proves resilient over the long haul. Wrapping up with a broader perspective, the S&P 500's performance today reflects a market trying to balance optimism around peace talks with lingering concerns about inflation and potential rate hikes. As long-term investors, remember that staying the course through these ups and downs often yields the best results. Use these moments of uncertainty to reassess your portfolio's alignment with your goals, not to react impulsively to daily noise. And over on the Nasdaq, the tech-heavy index's gains today remind us of the sector's importance in driving market growth, even amidst headwinds. Tech remains a cornerstone for long-term wealth building, but diversification across other sectors is key to managing risk. In the short to medium term, watch for any AI-driven catalysts that could push names in this space higher. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and I hope this breakdown helps you navigate the markets with confidence. Be sure to stay engaged with our daily summaries and dive into our SWOT analyses for deeper insights on specific companies and sectors. Hit that like button, subscribe for more, and we'll see you tomorrow for the next update. Stay invested, stay smart.